Morning. We're about to start our 2025 Research Forum. If I can invite you to take your seats as we prepare to begin. So my name is Eric Lee. I'm the Research Director at the AASB, and it's great to see many of you here today. The AASB Research Forum was started in 2016. And so it's been, for many years, we gather our stakeholders once a year to share ideas and have great conversations. Just before I start, I would like to acknowledge that some of you travel from many different parts of Australia, and some of you travel from overseas, our colleagues from Korea, for example. We also have a group of people watching us live through Zoom, and we have people watching us from Philippines, India, New Zealand, and United Kingdom. So a very warm welcome, everyone. Some housekeeping matters. I've got a sheet of evacuation details. Follow the direction of the Sofitel staff if there's any events of an emergency. If you hear the sound beep, don't go anywhere, stay still until we receive any instructions. But if you hear the sound whoop, meaning we have to prepare leaving this place. The great news is that there's lots of space for you to move quickly to the emergency exit door, which is right behind us. The bathroom is outside the Fitzroy Ballroom and proceed to the right. And morning tea, lunch, and afternoon tea will be served in the pre-function area outside this room, which is just right out there. If you have any pre-organized dietary requirement, please make yourself known to the Sofitel staff to access the dedicated dietary table. The post-meeting networking drinks, which we all would look forward to, will take place in the West Tower Suites on level 35. After the session, we'll take you to level 35. If you want to get access to Wi-Fi, you should be able to use network Sofitel events, and the password is SMOCEVENTS. SMOCEVENTS. Now, a bit too long to remember, but if you need the Wi-Fi passwords, please speak to the front desk. They will give you the password. I will also ask you to turn your phone to silent mode, but do not turn it off. Put it on silent mode, don't turn it off, because during the whole sessions, you will need this QR code to ask questions. So what you need to do is take a camera, point to the QR code, which will take you to this platform that you can ask questions throughout the day. You're encouraged to ask any questions or share any views. If time allows, we will definitely ask those questions. Now, the AASB Research Forum is not a typical academic research forum. It is a forum where we gather stakeholders to share views, share ideas. It's a safe place for you to provide us your insights and your experience. And so feel free to ask any questions and few insights. Now, with that, just want to also say that any speakers or presenters, they don't speak on behalf of the organizations unless they specify as such. Now, I'm going to invite our chair, Dr. Keith Kendall, to come up to say an opening remarks. And then after that, I'm going to invite Professor Brad Porters from the University of Melbourne to give opening remarks. Check.
Good morning, everyone, and thank you, Eric, for getting proceedings underway. It's very good to see such a good turnout for what's our flagship research event this year. Seeing quite a few familiar faces coming from near and far, and it's very good that we've got an international audience online as well. So today's research forum focuses on technology issues in reporting. So this is the first time we've had a proper theme for the research forum, focusing on digital issues, technology issues in reporting. We settled on this theme because it is timely and highly relevant to current practice. We've got three very interesting presentations today. One on digital reporting, which is a powerful tool to enhance transparency, helps meet user needs globally, and supports efficient capital flows by making information more accessible. It's also a particularly timely presentation given the interim report from the Productivity Commission 2 months ago now, I think it was. 4 months. Okay, there you go. Very recent. With that report calling for the adoption of digital financial reporting in Australia. So looking forward to that presentation. Followed up by new forms of assets, emerging technologies such as data and artificial intelligence investments, which challenge traditional accounting perspectives. Also dealing with questions that are raised about recognition, measurement and disclosure in financial reporting with respect to such projects. And we'll be finishing the day with a paper dealing with cybersecurity risks, which is increasingly in the media and public debate, raising the need for entities to disclose these risks clearly to maintain trust and resilience. We'll conclude the forum today with a panel discussion on rethinking the future global reporting landscape. Underpinning all the sessions today is the importance of engaging with academic researchers to provide evidence, insights and thought leadership for practice and policy. The AASB is very proud of its tradition of evidence-informed standard setting, and in particular academic research is at the forefront and the prime example of such evidence that we use in undertaking our core activity. Not least, this forum allows for the collaboration potential between the AASB, the university sector and the research community more broadly. There are quite a number of opportunities at the AASB for more impactful research, which we've been working on for some time now. In particular, there's the AASB Research Fellow Program, which has been going for about 2 years now. So for those of you with sabbaticals coming up, we call it OSP these days, get in touch. Of course, we have the Research Forum, but also the Dialogue Seminar Series, which many of you would have registered for at some point. That's been going for about 3 years now. But this represents opportunities to promote research to practitioners and international standard setters, amplifying the research impact of your work. And the last one that I'll mention is our SSRN Working Paper Series. So for those of you that are working on projects currently that are relevant to the AASB's work program, not necessarily the current work program, but influencing the future work program as well, we certainly encourage you to submit working papers as an outlet prior to formal publication. Now, with that, I'll hand back to Eric to introduce the first speaker. Thanks, Eric.
And I'd like to welcome Professor Brad Potter from the University of Melbourne, who supports us with this forum. Thank you.
Thanks, everyone. And I echo the welcome from both Eric and Keith. We at the university are thrilled to play an ever so small role in helping bring this group together. Our department, like many others around the place, is proud to be part of this community. We've got a group of really enthusiastic researchers that are happy to ply their trade on areas that are, I guess, of mutual interest to standard setters and practitioners, and we take that responsibility and opportunity very seriously. As Eric alluded to also, this is the 10th year, and I can say quite with some pride that I was also part of the first one at UTS, and I know that there are a number of people in the audience, some of whom I've caught up with already this morning, who were also part of that. And it gives, I think it offers some pride to reflect on that. And I feel also a little old, but that's okay. That's another conversation. So this is really a good chance to think about where our worlds collide or where our worlds meet, or put another way, I think reflecting on a lot of the conversations that we've that have sort of evolved to now, there's been a confluence of sort of work program and current research, and we bring them together and we can get some really positive and enduring benefits from those collaborations. And we do that, and I think we do that pretty well. And that has enabled us to participate, enabled academics to participate in PIRs and in collaborative research grants with the boards and collaborative, projects with each other. And I suppose what I would encourage us to do, or what I'd offer, is a challenge of sorts to think about how we might evolve that relationship to the next level. And I think that's, that dovetails into something that Keith alluded to as well. And that is, how do we think beyond the next project or the next PIR or request for tender or the next publication or the next, the current work program of the standard setters? And that reference to the future work program of the standard setters is a really important one. So I think we've got a collective opportunity to lead thinking and practice in the field, to really contribute some intellectual grunt to the AASB and learn from the AASB in return as to what and where and how we might think and how we might focus some of our efforts going forward. Happy to expand on that, but I do think we have a tremendous opportunity to take advantage of this group here and the community that sits around us. Again, thrilled to be part of it. I'm excited about the program that is that we've got in front of us for today, and I look forward to watching it unfold. So happy to meet or chat with as many of you as the opportunity presents over the next few days. And thanks for coming. Bye-bye.
Thank you, Brad. So I also concur that the research forum is like a reunion for us. Once a year, we gather together and share research ideas and talk to practitioners about research findings. So we have a very full pack of program today, and the first session is that we have two keynote speakers. The first keynote speaker is an academic keynote speaker. I'm going to introduce him, and I think most of us would have known and met him already. Professor Michael Davern, who is from the University of Melbourne. He holds the chair of Accounting and Business Information Systems at the university. With more than 30 years of global research leadership in data analytics, governance, and ethics, his work seamlessly bridges academia and industry. He has published extensively and partnered with leading organizations, including CPA Australia, EY, Microsoft, and the Australian Research Council. Professor Davern has authored over 50 papers in top-tier accounting and information systems journals, as well as industry commissions reports, offering deep insights into the evolving intersection of accounting, technology, and business transformation. Please join me in welcoming Professor Michael Davern.
Thanks, Eric. I always hate standing right behind the podium, so forgive me if I move around and you can't hear me. This makes me feel old, to follow on from Brad's point, because you get to a stage in your career where people start asking you to do keynotes and you think, all right, I've got to have some things to talk about. Those who know me well will know that I like to poke the bear. And so that's what I'm going to do today. I'm going to be a bit of poking the bear, get you a little bit upset, probably take you some directions you might not want to go or feel comfortable. And so if you look at my title there, The Future of Financial Reporting, that's why I've got a question mark. It's a subtle question mark, but it's there highlighting that we really need to think about the future. Where are we going in financial reporting? What are the challenges? What are the threats to us? Because if we think at accounting more broadly, we're facing some really difficult times in attracting people into the profession. And I don't think in my lifetime I've seen the dissing of accounting information and accounting reporting as much as what we currently have now. We've always been a little bit having a marketing and image problem, but I think that's not got much better. And so I want to try and emphasize, to me, the future builds on this idea that we are the original business data storytellers. So all this talk about data in this digital era that we're in, this AI era, we're the ones who have been doing data for longer than anybody else. So let's make sure we take advantage of that. Let's think about how we are not just transaction processing. That's not what it's about. It's about creating stories, making meaning about what's going on in the reporting that we're doing so we can deliver relevance and insight. So I want to put up a little bit of a straw man of AI. So I don't think AI is going to replace us, but certainly there's a lot out there who think it will. But I think it's worthwhile thinking about that existential threat that we have from AI, that it may replace us and where it may go. AI is getting faster and cheaper. Agentic AI is going to cause us some really interesting challenges where it's going to be taking decisions and actions by itself, not led by us. The ubiquitous availability of real-time data really brings into question something where you say, I'm going to produce financial statements that are 3 months after the end of the financial year, blah, blah. It's all like, wow, what's the relevance of that now, right? So we've got to think about that. The computational resources. So those in audit have started to experience this, that we don't do sampling much anymore because you take the whole thing, let the AI identify what some of the anomalies are in that. So our practices are having to change to represent that. What's our defence against that? And while I've spent my career spanning the accounting and technology space, I sometimes feel like now I'm being the Luddite, in the sense that I want to emphasise that yeah, the technology does amazing things. I don't have a day go by where I'm not using one of a number of AI tools for most of my day. But what is the power that we bring? It's in that professional judgment that we bring to our practices. And so I want to push today for a much more expanded role of judgment in accounting, because that's where, in the financial reporting that we do, that we add the value. We contextualize the data storytelling that we do. So yes, AI can look at 10 million cases and extrapolate patterns out of that. But our clients, the users of the financial reports we produce, are interested in this one organisation, in this one setting, in this one marketplace at one point in time. That's a context. We need to be using our judgment to tell stories within that context, to give meaning to it. We also need to recognise that what we have is a position of trust and credibility in what we do, and that we work relationally with those various users and stakeholders. And so while the technology is driving where things are going to go and creating change and will change the reporting landscape, we have to start saying, well, what's the human part that we do as accountants that ensure we're still at the centre of giving meaning to where these organisations are going, how they're performing, and how we might report on that performance. And that asks the question, are current standards fit for purpose? Even more pejoratively, are current standard setting bodies fit for purpose? Do we have the required expertise across the policymakers, the regulators, the preparers, auditors, and even the users? Do you feel ready for the digital future that approaches us? Do you feel that you're going to be replaced by AI? Do you know what AI can do to change your job? To change what the financial reporting landscape is when I can get real-time news feeds that I can be analysing patterns in as we go, rather than waiting for a report 3 months after end of year. So while technology is driving this, I think it means that we've got to get back and think about what we bring to the table as accountants. And one of the things I've been seeing in the work that I've been doing with industry stakeholders in a range of different settings in both not-for-profit, corporates and government, is there's a number of our key concepts that I would say are in tension in terms of practice. So materiality and relevance. and Tom Fricks over there, who did some work with me and Brad at the University of Melbourne and now at the standard setting body. And we started that project thinking about what relevance and what materiality was, and the end conclusion was we really don't understand what materiality is, and certainly what we conceptualize materiality as is not the way materiality is being properly practiced. And I've seen that more recently in some work we've been doing on leases, where, if you're familiar with a leases standard, has a practical expedience of $5,000 about whether you recognise or not. And we're finding organisations that are saying, well, that's the materiality level that we then apply. That's not what APS 2 says. It shouldn't be quantitative. You've got to be quantitative and qualitative about it. So our practices aren't keeping up with our conceptualisation of it. And that's on all of us in making that happen. We're in a hyper-connected world. There's a sustainable economy. And we're talking about greenhouse gas emissions, scope 3. That really brings into question what's the boundaries of the reporting entity. So a fundamental concept like the reporting entity, who are we describing the performance of, starts to come into question, and how we might make use of that. Measurement uncertainty, and somewhere in the audience is Jade, my current PhD student. We've been doing some work on measurement uncertainty in intangibles, and those who've seen me present before at AASB Research Forum will know that measurement uncertainty is one of my bugbears. We need to stop being scared of uncertainty. I would much rather see an accountant make a judgment about valuation using appropriate methods with transparency about assumptions, have that audited, have that presented in a set of financial statements, than what we will see if we don't start to be embracing more reporting on that front, which is management making disclosures in unregulated reports that are then interpreted by AI that is making some sort of assessment about the validity and predictability of those disclosures. We need to be using our professional judgment to give that relevance and insight. And so absolutely, things like intangibles, we should be reporting a lot more of intangibles in our financial reports. We shouldn't be saying, just because it's uncertain, I'm going to get scared about recognition and measurement. And we can see that the scare is there because we've done work looking at whether people are making voluntary disclosures about unrecognised intangibles, and no company in Australia is pursuing that. So something's preventing them doing that. We want to make sure that they're doing that, because that then gets it back into our judgment, our processes of validating that. That's a more credible, believable number that keeps us in the story. Sector neutrality. I don't think sector neutrality is working. So I've been doing some work recently on with CPA Australia on post-implementation review stuff around leases. And in the public sector and not-for-profit sector, leases is not working. Users are not making use of that information. The number of times I've had people say we have to explain to a stakeholder that this is just an accounting thing. That really worries me when we say it's just an accounting thing. Where's the meaning for that? Now, do we need it in the corporate sector? Yes, because it's dealing with solving a problem of off-balance sheet financing. It's not working in the public sector and not-for-profit environments. When it came in, I was on the board of a large not-for-profit. I had to say to the CEO when he's asking, well, what the hell's going on here? I said, it's just an accounting thing. I had to do that because he couldn't say, I'm recognising an asset, a liability, it all cancels out. What's the point of this? In public sector environments, they're not using the information. The users are saying, just get me back to the actual list of what the leases are and what the outflows are so we can see where they're going to budget. And we're seeing local councils getting caught up with 100-year leases that cause horrible expense things early on, and are caught up with embedded leases in service contracts. You hire a company to do your garbage collection, you put your council logo on the truck, and oh my gosh, you've just leased a truck. That wasn't the intention there. So not working. Similar things going on sustainability reporting. Why do we do sustainability reporting? I'll be presenting a bit about that on Wednesday. It's about behaviour change. Well, if you want behaviour change in the public sector, you do that by ministerial directive, not by a reporting mechanism that's motivating someone and slapping them if they're not performing correctly. So let's revisit sector neutrality. And what this is highlighting to me much more is we've got to spend some time thinking about who our users are, what their needs are, what their expectations are, and recognising the diversity of those users. As we think about how the nature of the reporting entity is changing, that's also identifying a different set of users for the information we're producing, so that we can reclaim that position as the business data storyteller in that central role that we've held for centuries, and make sure that we don't lose that by being passed by a technology that doesn't have the credibility, doesn't have the judgment capabilities that we have, doesn't contextualize it, doesn't have the relationships and the understanding that we've developed over time. So where do we go? What are some of the things we can do? I think we need to tolerate measurement uncertainty and encourage the use of judgment, more recognition of intangibles, rethink the recognition versus disclosure decision. I'm very much in favour of more recognition, because what I'm seeing is when we only make a disclosure, the data quality is not as good, it doesn't get as much auditor attention, so the number's not as valid and believable and informative. We need to think about how we communicate that uncertainty. My colleague at Melbourne, Matt Pennick, will say, give them a confidence interval. Yeah. No, people are just going to take the midpoint of the confidence interval and then use the point estimate anyhow. So we need to think about, how do we effectively communicate that uncertainty to different users? How do we encourage the use of judgment without jeopardising our position of trust and credibility as reporters in what we're doing? I think some of the scope for improvement and where we're going to learn some things on is service performance reporting and sustainability reporting. And the reason I see those coming through so strongly is there are areas where we're getting back to fundamental questions. We think we know, in a lot of cases, what we're measuring because we've got a standard that tells us how to measure it. And then you get into the practice of those sort of things and it doesn't fall out quite the same way. So thinking about how we are telling that story, using connectivity to craft that story between the financial and non-financial metrics in a contextualized way. Thinking about how our financial reporting expertise fits into a broader reporting regime. The numbers are the starting point. We need to connect to the decisions that are going on, understand who our users are. That's where we're going to add value, or they're going to get an AI agent to run its eye over the data, generate a pattern and develop some insight from it, which will create volatility in marketplaces potentially, because those things can get it wrong, and will potentially displace us. We need to think who our users are, what their needs are in the context of what that reporting entity is and where we define that. So some of the key policy implications, and since we're at a AASB research forum, I've got to finish on a slide with policy implications. Public sector and NFP leases, I've said, don't work, so let's revisit this neutrality of the sectors, because I don't think it's happening. We need fit for purpose standards, so that's going to be some change there. We need to prioritise service performance reporting. It's something that I know has been a bit of a third rail in Australia. We need to be doing stuff on that, because that's getting back to understanding what we actually mean by measurement, what we actually mean by performance, and I think it'll help us better understand how we can do financial reporting as well as reporting on non-financial metrics and build that whole story. Embrace measurement uncertainty. Uncertainty is good. Where there's uncertainty, there's a need for judgment. That's where we get to apply our expertise. And that judgment, when we start to look at that in a forward-looking context, is where we get to use our insight. That isn't just a pattern in the data that the AI has generated, so that we can enable and encourage professional judgment, because that's where we add value in our reporting. It's not a mechanistic process, it's a judgment process, and we need that there. That's where we add value, that's where we give relevance, that's where we give insight. And in a nod to one of our later presentations, and I know Indrit's going to like this, let's embrace digital reporting. Not just for the efficiency reasons, but the tagging of the data that's going to happen with that, because otherwise the AI is going to do automated tagging and interpretation of what's there. We're going to lose the ability to specify the meaning. I've never understood why our international standard setters, and I'm probably going to make someone mad in saying this, didn't think about XBRL and the tags that are sitting in XBRL as actually defining what the hell an asset is in the way that your report it is. So we need to be involved in doing that because that's the data that's there. That's the way the data is getting tagged. That's the way the data will then get interpreted. If we're not involved in that judgment, what's our role? So let's get on that XBRL bandwagon now. I know there's been constraints in Australia and the size and scale and issues, but if we don't do that, we're going to lose our ability to keep telling the data story and control of that data that's going out in the marketplace. So there's some challenges. I think we're going to see in some of the presentations today some responses and directions and answers for that. But I think it's exciting times in the profession. I think we won't be replaced by AI, but that means that we've got to be thinking accountants, thinking about what we're doing in financial reporting, understanding user needs, making judgments, driving business data storytelling with relevance and insight. Thank you very much.
Thank you, Michael. So I'm sure Michael will be sticking around for the whole day. If you have any questions, feel free to have a good conversation with him about thoughts. So it's timely for me to invite Commissioner Julie Abramson of the Australian Government's Productivity Commission. Appointed in 2015, Julie brings over 30 years regulatory experience at both state and federal levels, with particular expertise in economic-related regulatory matters such as financial services and competition policy. She has co-commissioned several inquiry reports, including philanthropy competition in the Australian financial system and mental health, and is currently working on the harnessing data and digital technology inquiry, which is part of the 5 inquiries currently underway under the government's 5-pillar productivity growth agenda. Please welcome Commissioner Julie Abramson.
Well, thank you very much. I was saying to one of the colleagues before, being in a room full of accountants, I started thinking about how delayed my taxation return is, but I won't be troubling you with that one. Just in terms of the work that we've been doing on data and digital, in fact, Michael, you'll find that much of the way that the Productivity Commission has seen all these issues is really what you've talked about today. But I did just want to set the scene because we've done 5 interim reports on productivity. The first one, which would probably be of interest to this audience, was creating a more dynamic and resilient economy. And in that, we looked at some taxation issues as well as that bugbear of business regulation. The second one was building a skilled and adaptable workforce, and it was interesting reflecting on some of the comments this morning about what are the skills that the next generation of accountants are actually going to need. Today I'll be talking on harnessing data and digital technology. We've also delivered a report on quality care because the care economy is now, service economy is a very large part of the Australian economy. And then the final one dealt with cheaper, cleaner energy and the net zero transformation. But just to give you some numbers, new digital technologies like they have in the past can create benefits across the entire economy, including speeding up lacklustre productivity growth. I am not an economist, which is always quite amusing because when I'm at the Commission table, they're normally, I like to say to them, well, it's very interesting, but it's not the law. So whenever I talk about productivity, probably some of my economic colleagues will say, well, it's very interesting, Julie, but that's not the way that we think about the issues. But the important part here is that technology has always been a driver of an increase in productivity. And you can see that really in the statistics we've got there. You know, internet and mobile phone adoption increased Australia's GDP per capita by about 3% between 2004 and 2014. And we also think that AI and related digital innovations could offer equivalent or bigger productivity gains. Now, these figures, the Productivity Commission has been very conservative. So we have a figure of 116 billion to GDP over 10 years, and you'll hear a lot of differing views. But as I said, we're at the conservative end of it. And it's really important because we think that multi-factor productivity gains above 2.3% are likely, although there's considerable uncertainty, and this would translate into about 4.3% labour productivity growth over the next decade. We also see, and I'll talk a bit about this today, better data access and use regimes that reduce frictions between data holders, users and subjects, consumers and businesses, can enable the development of new digital technologies, and less friction can also spur productivity growth more broadly. And insights from data can help reduce the cost of doing business, increase the quality of products and services for consumers, and lead to the creation of entirely new products. And what was interesting, reflecting a bit on the previous speakers, is that, you know, I really like that quote that you were the original data people. But the issue now, and the way that the Productivity Commission has thought about this, is really about data in the hands of the consumer. And we'll talk about this a bit more. So not so much about the professional use of data, but the data that could assist consumers directly. So we looked across 4 domains, and there's a reason for this. These are the things where we thought we would get the biggest productivity growth. And I'll talk a little bit today about proportionate AI policy. Then we talk about data access pathways, and of course, digital financial reporting. And can I say how thrilled I am to be here today, because you're the first group, apart from some great submissions we've had, that's really engaged and interested in this topic. When I talk with other people, they're usually very interested in AI. So thank you for your interest in that. And also flexible privacy regulation. So just a little bit of a timeline here. We expect to have our report to government. It says there the 13th of December, which is Saturday, but I think that we'll have it with them probably on the 12th of December, which is the Friday. And the other issue about that is that the government will have 25 days in which to table that report. So moving on, just wanted to talk a bit about artificial intelligence. And it's an interesting area for us, because it's interesting being here this morning to hear how accountants are thinking about, or the accounting profession is thinking about AI, but it's certainly very widespread in its use, which is kind of interesting, because one of the things is that people are using AI all the time, and yet we hear these concerns about AI and how it will deal with jobs and job losses and what it will mean for the future of careers. But one of the things that I'd say, and I really was very interested in your comments about this, Michael, AI is good at automation. So automation by machines performing tasks that were previously performed by humans really has driven so much of the productivity growth that we've seen since the Industrial Revolution. It's increasingly able to automate non-routine cognitive tasks. This makes it a little different to previous waves of automation. AI can close the knowledge gap between those with formal education and many years of experience and those without. So it has the potential to help less skilled labour, but it can also augment labour. And I just had a really interesting personal example in the last few days. I had a taxation question, was reasonably complex, because I finished my term with the Commission at the end of December. And I thought, oh, well, I'll ask ChatGPT what it has to say about particular payments that I received. I put a very precise question in, and it gave me quite a good answer. But I then spoke to my accountant, who said, well, that's all very interesting, Julie, but... So I think that there's really continues to be a role for for the profession. One thing I did want to say, though, is about how we think about AI, and I think this is particularly pertinent for this group, because there has been a very lively debate about whether we should have an overall AI Act, whatever that might encompass, for the whole of the economy. But I think the presentations we've had this morning have really shown this is a very precise area, in the sense that it's really the accounting and the accounting bodies who should be looking to see whether or not the current tools that you have are fit for purpose. And that's really been our approach. So our view that regulatory changes in response to AI should be outcome focused, technology neutral, proportionate and risk-based. Importantly, many of the harms are known, and accordingly, our approach involves renewing or reviewing existing regulatory frameworks by way of a gap analysis. And this is something that you spoke about this morning. If existing regulatory controls cannot adequately manage risks, then the new technology neutral regulation should be considered. And I think that was really interesting when you were talking about leases and the way that we think about these things, because that's certainly something that you would be looking at. What is it that's actually required? And if technology neutral regulations are not feasible, then as a last resort, AI-specific regulation can be considered, but it's only to address the specific risks that cannot be adequately handled by technology neutral regulation. So this is really, as I said, I genuinely think that this will be something which the profession has a real say in shaping the future in terms of AI. It will be up to accountants and accounting bodies to decide, well, what is an asset for the purposes of this? How are we going to treat it? So I really think that that was a very good conversation previously from you, Michael. The other issue you would heard a bit about, but I won't sort of dwell on it too much, is that copyright is an area that we looked at by way of a case study, because the large language models like ChatGPT, Perplexity, they're built on vast swathes of data. And no doubt some of that data will be copyrighted material. The important thing to note is that most of these large language models, if not all, with a few minor exceptions, are being developed overseas. And this raises real issues about Australian copyright law, because one of the things that some of the tech companies have argued, and I'm sure you've seen this in the public domain, is that there should be a so-called text and data mining exception to the Australian copyright law, which then would allow them to take that material for the purpose of training AI. And of course, those in the creative sector were very quick to say what their concerns were here, that it would diminish creative works, that their materials were being stolen. One of the things I would say is that the Commission never recommended that there be an exception. We simply said that this is a live issue. What are some of the ways that we can think about it? And, you know, there are some things which are developing in the market at the moment. So, for example, licensing arrangements are starting to develop. And one of the other things that's happening is that there are certainly issues in terms of the enforcement of copyright law. So we'll have a little bit more to say about that in our final report. The next issue really is about data and data pathways. Some of you will be familiar with the current consumer data right, but one of the issues that, you know, you were talking before about accountants being the holders of data or data interrogators, but one of the issues has been that although all of us produce a lot of data about ourselves, it's not really our data because it goes somewhere else and it gets used. And one of the ironies is that everyone around you is trading in data except for you as a consumer. So we found that data access in Australia is patchy, it's inconsistent. While businesses routinely trade and make money from data about their customers, it often remains invisible or unusable for those customers like ourselves. And even when data is available, and this kind of brings me a little bit to financial reporting, it's often in unstructured forms like PDFs or read-only dashboards, which make it difficult for people to use. And because it's hard to use, people often resort to types of behaviour like screen scraping, which has got a huge number of security issues with it. So what we thought about was we knew that there was the consumer data right, which actually came out of work my colleague Peter Harris, who was chair of the commission, and Melinda Talento, that in 2000, I think it was 2017. But the CDR was designed to deal with financial information, which is obviously very sensitive, and energy regulation, but it was designed so that it could apply in other sectors. But one of the issues has been that it's been hard to use, it's been very expensive. So the Commission really thought about, are there some more flexible pathways that we could develop? So for example, you know that your financial information is really sensitive, you would want to have some bespoke settings in relation to that. But do you really care that people know that you bought 6 avocados from Woolworths last week? But this is important information for you because there are a lot of apps being developed which actually can help you shop better. So this is one of the things that we were thinking about. Not all data is the same. There's variability in data. The other issue that we did spend quite a lot of time on at the Commission was agricultural data. And there's been a lot of work by the agricultural sector and the NFF in terms of the Farm Data Code. Previously, we'd noted a different issue in data, which is that there was a right to repair problem, so that if the thresher broke down in the middle of the wheat harvesting season, the local repairer couldn't repair that vehicle because they didn't have access to particular codes and copyrighted material. But this is a slightly different data issue. But one of the things that was really pleasing is that we noticed that actually a lot of apps were being developed, which actually gave the farmer the ability to use this information. And we've got some sort of really quite interesting graphics where modern farming is all about the data. It's about weather data, it's about harvest yields, all of those things. And there's this farmer sitting in his tractor or her tractor, and it's got like about 10 screens. But with the use of an interface that works, there's one screen. So we certainly will have a little bit more to say about that. I'll skip through the privacy bit because really the issue there was that we need people to trust how their data has been used and what happens with their data to really get the benefits from this data exchange world. And we know every time there's a breach, I mean, how many of us actually think, oh no, you get the email saying, oh, your data has been disclosed. So we've had quite a think about that. And also it's in the context of the review of the Privacy Act. So we'll have some more to say about that in our final report, which really brings me to the issue that I know is of particular interest to this group, which is digital financial reporting. And I have to say, and I'm sure you're all across this, but I was actually quite shocked that I think it's since 2010, the ability to do digital financial reporting has been there, and no one had done it. And my poor team, I actually worked at ASIC for a number of years and actually worked with the current chair when I was there. And I thought, that can't be right. Can someone go and check? And I think they got sick of me. And in the end, I did actually ask ASIC myself, and they said, no, we haven't had people lodging digital financial reports. Now, the benefits of it, are clear to us. They would increase efficiency and accuracy, which with financial information can be extracted and analysed, and it would enable more effective decision-making by investors. And I'm really pleased to see Rachel from the Shareholders Association here today, because this is not an abstract concept. This is actually about all of us, because so many people hold shares, and I'm sure Rachel will be talking about that, but we hold shares in our superannuation funds. So we're very supportive of anything that would promote transparency and accountability. So you can see some of the issues I know that are really well known to people here. I think my fellow commissioners were unimpressed when I started to talk about XBRL or XBRLI. I think they thought that was too much of the detail, but in fact, those are really important conversations to be having, because this is about both the taxonomy and how we're going to put these together. And so that's just a little graph there. On copyright, we had 500 submissions, most of which were deeply, deeply disappointed with the Commission. On financial reporting, I think universally everyone was very happy. I think there was one stakeholder that wasn't, and people really identified that the things that would be really good about it. So it wasn't just about the report preparers and users. The interesting thing was, and I'm sure you're all over this, but Deloitte did some foundational work about actually what would be the benefits. And one of the issues really is the initial startup cost, but we would expect that to fall over time. We also know that some Australian companies, not a large group, but are already preparing reports in this format overseas. Now, I suppose, I hope that this isn't too controversial, but we thought that it needed to be digital by default, and we thought it needed to be mandated, because in Canada, I think it's Canada, they had a voluntary, people are not putting it in, the digital reports in, and there's a first mover problem. I think that my economic colleagues tell me it's a coordination problem, but it's really, where's the bet? People couldn't see the benefit, and so until everybody has to do it, no one was willing to do it. And as I said, we think that the cost will fall over time, and I really take up this point here. AI and other digital technologies are a complement. They are not a substitute. The other issues we're just giving some consideration for related to issues like scope. I'm really indebted to the chartered accountants because we struggled a little bit. I'm not too bad on the corporations law, but we struggled a little bit, and they said just go with the disclosing entities, and that's kind of where we started. And you know, in terms of that was primarily, as you all know, the publicly listed companies, and there are a few others there. We also were asked about sort of which report should be submitted digitally. It was really interesting that you talk about sustainability reporting, because digital financial reporting might kind of be the first cab off the rank. If we can get that right, then we could see others flow from that. Some of the other things that we thought about was the requirements for report preparation. So things like the taxonomy and the format, which we just discussed, and also establishing the infrastructure and procedures. And I was having a little chat to Rachel before, and I hope she won't mind, but one of the issues that we've been thinking about, well, ASIC is the financial services regulator, but it will need to be a conversation with the exchanges as well, because there is a really important connection between how information is released to the market. And we'll have a bit more to say about that, but I think that's probably something that we would be seeking for ASIC to have a view about. And then the final thing, which I hope Eric brings me right to time, is the provision of high quality, accessible digital financial data. So it's really got to be high quality data, and we're looking to you here as the accounting profession about the type of data that actually needs to go into the system so that it can be tagged, etc. And then what measures are needed to ensure that digital financial reporting is accessible to users. So look, thank you. That was a bit of a whistle-stop tour of our report. It's across 4 domains. We expect to hand it to the government just before Christmas, which fortunately for me will be the end of my term at the Productivity Commission. So my colleagues will be the ones that will be needing to answer for it. So thank you very much for your time this morning.
Thank you, Commissioner Julie Abramson. So the next session will start at 11:30, and we'll be talking more about digital financial reporting. For now, we're going to have a morning break. So I invite you to have some tea and have a break, and we'll come back here at 11:30. Thank you.
Hello, everyone. May I just kindly ask you all take a seat because we will commence the session shortly. Welcome back, everyone. I hope that you enjoy the morning tea. My name is Hang Chen, Assistant Manager from AASB. It's my absolutely great pleasure to introduce to you the very first research session of today. The research session will kick off with the presentation from Professor Indris Choshani. So Indris is a professor in accounting and data analytics at the University of Adelaide. His research interest focuses on digital reporting, XBRL technology, and their implication on accounting standard setting. He is also currently serving as a joint editor-in-chief of International Journal of Accounting Information System. Please join me in welcoming Professor Indris Choshani.
Thank you. We won't be much longer at the University of Adelaide. Rather, it will be Adelaide University from early January. But that's why the PowerPoints are tagged as Adelaide University. Anyway, thank you very much. It's great to have the opportunity to present ongoing research that I'm doing with Professor Nick Robotham at the University of Birmingham. Before I go to an agenda, I just thought for the uninitiated in the digital corporate reporting technology, a quick definition essentially. What is it? It's a process whereby you are structuring data, all right, for machine readability. What does it do? Why do we do that? All right, we do that so that it facilitates automated reporting and extraction and data analysis. And how do we do it? We do it by way of a tagging process. Okay, now to do that, we need infrastructure. That infrastructure includes things such as tagging software, right, which allows you to mark up financial information. And of course, we also need a taxonomy. That's where the tags are defined. Roughly, that's general. I'm not going to spend much more time on that. So this presentation is about current practices, all right, the challenges that preparers are encountering, and of course, some points about implications. Now, where are we getting the data from? For the last couple of years, we've been talking to various stakeholders as listed in that PowerPoint, in essentially advisors, where we have tagging agencies, vendors and auditors, multinational preparers. We have quite a few of them. Professional bodies, but also users. We've also used lots of documentary evidence, typically coming from standard setters. Right, so this is my agenda. All right, so essentially we see digital corporate reporting as an ecosystem or system more generally. And I'm going to focus, and these are the key themes that are coming up from that data. Okay, so I'll talk about each and every one. Specifically, and from those, I'll just make points about regulatory implications. First up, perceptions of regulation. What we find essentially in this data is that regulation has been the key driver for the adoption of digital corporate reporting. But the key perception is that the reason why preparers are doing that is because the regulators are asking them to. And there is that sense that regulators generally are more interested in that the data, all right, be filed by the time, by the due date, and they're not very interested in the content of the digital report, sadly. There is also perceptions that this digital data, all right, are not actually being used by the regulators and investors. Now, I'm underscoring the point perception because, as we will see when we talk about usage, there is actually digital data usage, and that comes essentially a point that the regulators need to tell, or the users, they need to tell their audiences how and why they're using digital data. Now, before I talk about the modes of preparation, a few words about the preparation cost, because as was mentioned earlier by Julie, essentially there is that sense that using digital corporate reporting can be costly. In fact, that is true for the first year. All right, so typically you need a couple of things. There is some investment in infrastructure. So you need infrastructure as well as expertise, tagging software, the tools that you will need to do the tagging, obviously. And of course, you need staff time for that purpose. In some jurisdictions, and as I'll talk about later, digital corporate reporting needs to be audited, all right? So obviously there is also assurance costs that are associated with that. So there is an audit fee, but that's not everywhere. Now, the good news is that costs can be substantial in year one, but they drop significantly going forward, in the sense that software, for example, have a feature which is called the roll forward facility or capability, in the sense that because reports generally don't change much in time, all right, you can roll over tagging and only tag how the new information that is provided in the reports going forward. There is also training, all right, and learning that it comes with that. In terms of modes of preparation, this is what we find. We find that there is two types of, broadly, you have bolt-on preparation, you also have built-in or integrated preparation. Now, with the first one, we have a situation whereby preparers essentially do their reporting exactly the way that they've always done it, but then they bolt on the digital tagging, all right, at the very end of it. That tends to be comparatively the lesser expensive version. We also have the integrated version whereby tagging happens as the disclosures are being created. So it happens in parallel with that. That's a lot more, well, comparatively is a little bit more expensive, but those preparers at that end, essentially they are observing reporting efficiencies going forward. We also observe some differences in terms of engagement. Some preparers are more engaged than others. Some essentially are working with the tagging agencies who they outsource to get more to do the tagging or to help with the tagging, whereas others are going, you just do it for me, I don't want to have anything to do with that, which can be essentially very problematic in terms of quality. That's why we see issues with quality in the context where preparers are detached or very little engaged, but we see generally better quality with the engaged preparers because essentially they are developing that capacity. Now, tagging practices, what about that? What comes in our data in terms of that? Tagging can be challenging, and Michael made a point earlier in his presentation about judgment or definition of tags. Part of the issue is that you need DCR capacity essentially in the organization, and that includes specialized knowledge of what? Of two things: the taxonomy, right, the dictionary where the tags are provided or specified, but also the tagging software. Now, the key issue is that some of these tags are not defined. That's where there will be some tagging of some disclosures is going to be quite straightforward, but it's likely to be much more complicated in others where judgment is required. So that can be quite important. So that interpretation can be problematic and has been quite a bit of a challenge with some preparers since the tags are not defined in taxonomies. There is, however, good news in the sense that tagging software usually can provide assistance. They have tools, capabilities, including machine learning capability support that can help to facilitate that type of process. One thing that is quite interesting essentially there, and I'm picking only one of the key themes, is the theme which is about extensibility. So essentially, tagging or preparers have this issue: do I want to tell my own story or be comparable? That's one of the things that the technology offers. It allows automated data extraction, so these firms or analysts can compare. All right, so do you use custom tags or not? So there are two key themes that we see there: taxonomies that can be closed and open taxonomies. Now, when you're looking at closed taxonomies, we are looking at situations whereby you can't, in a way, you have to use the tags that are already available in the taxonomy. However, that might, quote unquote, air quotes, essentially just go against comparability, because you might have a situation whereby preparers will aim or will try to fit a square peg in a round hole. And therefore, the question then arises there is, are these comparisons going to be meaningful if preparers are going to try and fit those disclosures onto the tags, on the tags that are available in the taxonomy? On the other hand, open taxonomies, they allow preparers to create their own, to add their own custom tags or their own extensions so they can tell their own story. But then we find these behaviors which are quite odd in the sense, essentially, because some preparers start creating custom tags whilst there are tags in the taxonomy. So you have this myriad of, or this proliferation of unnecessary custom tags. That's why we have this situation whereby regulators generally are discouraging excessive custom tag use, especially if there are tags available in the taxonomy. We also have situations whereby, for different reasons, tagging agencies and also auditors are demonizing use of custom tags in the sense that they make the reports look way more complicated. What has been happening to avoid, to counter these issues? The FRS Foundation essentially has created common practices as well as illustrative examples. We have initiatives that are taken by the industry, for example, in France and Italy, whereby banking industry, for argument's sake, they are agreeing on custom tags simply because they say, well, we definitely need to be able to tell our own story. So we are creating those, and these are good initiatives. But also we have initiatives like in Japan or Taiwan, whereby tagging agencies, for example, in Japan are doing that role, whereas in Taiwan, we have the regulators, including the Taiwan Stock Exchange. In EU, they've come up with a very interesting solution to allow custom tag use, but essentially by providing anchoring. The anchoring is whereby you are allowed to create a custom tag, but you anchor that to one of the core taxonomy, to one of the tags in the core taxonomy, as in that particular example shown over there. So essentially, this is an elegant solution that allows flexibility whilst also enables some sort of comparison. But there are issues even with that, because obviously, as you can imagine, one will need to apply judgment. Where do I anchor one particular tag to, whereby, and we have issues whereby tags are being anchored at a very high level. For example, someone would do that wrong, would tag that flight equipment to an asset core tag, which then you start going like, how is that going to be useful to preparers? But generally, the thing that is quite important here as an implication is we want comparability. And obviously, comparability comes with conformance with the taxonomy. But is that conformance then going to be at the expense of telling your own story? So there is a bit of tension here that has to be considered going forward. Data quality. We find that data quality has been largely problematic, but in talking to these stakeholders, what we find is data quality needs to be defined at 3 levels, all right? It's a 3-dimensional construct in that sense, in the sense that data has to be technically valid. It has to comply with the rules of the technology, namely, well, the data standard, that is XBRL. It has to comply with the rules of the regulators. And of course, it needs to comply with the accounting standards, all right? So traditionally, we have compliance with that 3rd layer, but more generally, but now with digital data, you need compliance also with those other dimensions as well. Now, the thing that is quite interesting here is that when filers typically create their reports, they file them to regulators' portals, and the regulators' portals will do some of that assessment, all right? Typically, they will do that automatically. And there are 2 types of errors, warnings, as it were, that come up. Number 1 is errors, all right, in terms of severity, and they must be fixed. And of course, warnings, and they must be reviewed. Now, in ESMA in the EU, the situation is that there are about 8 or 9 errors. All right, so that must always be fixed. But warnings, there is over 400. And what we find is that there is lots of preparers who are going, you know what, I'm going to review that and I'm going to do nothing about that. And that, in a way, explains the huge quality variation that we observe here. So the implication here is that we need to be very careful about what we define in terms of errors and warnings and how we're going to monitor that going forward. In terms of quality, the point that I need to make here is very important, that everybody in our sample, including documentation, is that it is the preparer's responsibility for the quality is the preparer's responsibility. And that includes preparers as well. Now, typically all preparers, what they're doing, whether they're doing the bolt-on, the built-in, engaged, detached, whatever, they review these digital reports, and they will review them against taxonomies and against rules and so on. Right? But the problem is that they are encountering huge validation challenges. And again, there is a point that is related to the point that Michael made as well, is that these rules, whether they are technical rules or regulatory rules, they are interpreted differently by different software vendors, and that has been problematic because many preparers, they might create a digital report, they have it validated, quote unquote, by a software, by a tagging software, they feed it to another, and that one spits out a huge range of error messages. And pretty much every Tom, Dick, and Harry who participated in here, in this research so far, they raise that as a significant issue because essentially it gives these different interpretations, they create issues with that. And one of the key issues is the tag choices. Now, assurance is also another situation, but only a subset of the preparers that we looked at, that we spoke to, have to deal with that, typically those that are listed in the EU, because ESMA, the regulator over there, has mandated that preparers must audit their digital corporate reports. So typically, what do auditors do? They will validate automation. They automate validation. So things that are related to technical validity, regulatory validity is automated. They have tools for that. And again, these tools are based on the auditor's own interpretation of those rules. So there is more variation there. But also we observe that there is a lot of judgment there required to look at the tags. All right, so that's is this tag, does the meaning of the tag correspond with the meaning of the disclosure? Judgment is critical, and we have unanimous agreement on that side of thing. Okay, now the other bit basically that we notice is that there appears to be not enough, all right, internal control, or there appears to be lots of internal control weaknesses surrounding digital corporate reporting. For example, we're talking to an auditor in the UK, and they were saying that the board never looks at the digital corporate report. They look at the normal or traditional report, but they can't seem to be bothered with the digital corporate report, which is problematic. We also have situations in terms of materiality. Should we reconsider materiality in terms of digital corporate reporting? And we have lots of evidence that is suggesting that the traditional materiality assessment rules are not accounting for the context of digital data usage. The whole idea is that you are doing mass extraction of data, and whilst you are able to look at qualitative disclosures, essentially, often, if you are getting a sample of 200 or 300, you may ignore that. And we have evidence, I'll provide examples maybe during the discussion, whereby that becomes a huge risk. And many of the auditors also don't understand or don't appreciate those differences. So they're getting the preparers, no, don't need to fix that particular tagging error simply because it's immaterial. And those errors are then subsequently compounded. One thing that is a huge problem is the lack of international digital corporate reporting audit standards, and pretty much every Tom, Dick, and Harry in our data set is raising that as an issue. But also in the EU, and I'm focusing in the EU because that's where auditing is mandated, different regulators across different countries, they have different stances towards quality. Some care, some don't care. Typically, Scandinavian countries are very strict in terms of scrutiny of these digital corporate reports, but in Southern Europe, they can't be bothered. And essentially what appears to be the case there is that they are valorizing, or they are prioritizing different dimensions of the quality that we mentioned. For argument's sake, some are simply validating the reports. Are the technical rules observed? Do the reports comply with technical rules? But then they don't care that lots of the tags there are just wrong, okay? And that is a huge problem. That has been and continues to be a huge problem. Another logistical issue is the filing deadlines. Many preparers appear to have just a couple of days to do digital corporate reporting when they do the bolt-on version, right before they can submit it. And when they do things in a rush, they are missing lots of errors. That's a big problem. Or sometimes they're simply going, you know what, I don't care. They will leave it, do whatever tag you want. They will leave it up to the auditor. So they're not engaging in a meaningful way, all right, to get things done. Let's not forget, they are responsible, all right? The quality is their responsibility. Finally, about data usage. Again, here we have a huge problem, is that there is uncertainty about if digital data are being used at all. And the quality issues that we observe undermining the confidence for that. So it's something that really needs to be addressed. We do, however, have evidence that aggregators or data providers, the term that we're using here, and of course the regulators are using this data, but they don't use it they just pinch it from the websites or from the portals. However, they do lots of curation. They do lots of data quality before they actually use that. We have mixed evidence in terms of custom tags. I talked about custom tags earlier in the sense that some people are saying, yes, we use it. Some people are saying, no, we can't be bothered because it's simply that particular data is not comparable. So evidence, we have evidence, especially regulators in the US, they are using AI models to parse the data, and that has been, and so essentially for those people who think that digital data are not being used, that essentially is fibs, all right, because it's being used there. Now, we don't have any evidence if non-institutional investors are using that data. We know that there are lots of tools, free tools that are made available by providers or regulators, but earlier on these tools were quite limited. For example, EDGAR in the US, or SEC in the US, would provide a tool whereby people could compare two companies, which is not exactly what digital reporting is about, all right, but I understand that there is greater functionality that has been made available going forward. Some tools have actually gone in the other end. They are providing too much sophistication for non-professional users, such as expecting, for example, non-professional users, go and do some Python coding, mate, and I'm going, that doesn't really make sense, okay? But anyway, I know that, sorry if I feel I have to rush it, but I wanted to tell the story. XBRL rules, I think it's a great technology, all right? And but one needs to essentially, we need to learn, all right, from it, and we need to use it. We can take advantage. Australia is behind, sadly, all right? But if there is a silver lining to this, is that there is great learnings out there that we can learn from the experience or from the mistakes of many others. I'm going to stop now. I can see that she's ready to get out of there. All right, thanks.
Thank you so much, Ingrid, for that excellent presentation. Audiences, please don't forget to scan the QR code and submit any of the burning questions for our panel members. So now we will move on with the second part, that is the panel discussions. I'm so excited to introduce our distinguished panel members who will be joining us on the stage. The panel members will be introduced in the alphabetical order based on last name. May I once again introduce Commissioner Julie Abramson. Please come up and join us. We would love to hear more of the insight for data and digital reporting. Thank you, Julie. Our second panel members, Amir Ganda. Amir is a reporting and assurance leader of CIANZ. In his role, he has shaped the professional vision on key policy decisions. He also represents the accounting professions in major firms all over the world. Our next panel member, John Hartland. Please join us. John is the Director of Strategic Partnership at Workiva Australia. He has built strong partner ecosystem for various business across fintech, governance, and human capital. The next panel member is Rachel Waterhouse. She's a CEO of the Australian Shareholder Association. She has more than 25 years of business leadership experience in the industry, professional association, and the financial services. And our last panel members, Professor Emeritus Ann Tucker. We just have a catch-up in Germany last week at the AASB Research Forums. She's a former member of International Accounting Standard Board. She also widely recognized for her extensive publication in accounting profession and accounting standard. The session will be moderated by David Bassett, AASB Principal. Please welcome David and all of the panel members. Thank you.
Thanks, everyone, and thank you in advance to the panelists. So what I thought we could do is just take a step back and start to explore some of the benefits of digital reporting, because we just heard a lot about the challenges. So I think it's important to balance that with the benefits. So the first question I have is for Julie. So as part of the work of the Productivity Commission, and I know earlier in your keynote speech, you had a slide that identified the benefits of digital reporting. I was wondering if you could just elaborate on a little bit more about those benefits and how they flow to the various different stakeholders in the financial reporting ecosystem and the Australian economy at large.
Yeah, well, in terms of productivity, it's really about making the information available. We've always been very interested in the data and digital report about the development of intermediaries, so things like apps, but it was very clear that the digital reporting and the digital form of information really is the way of the future, because it's really about the data and the data being accessible. And certainly we would foreshadow in the future, subject to the right type of regulatory controls, that it would empower consumers to do more off their own account. Also, it's going to be a labour saver in terms of, you know, some of the analysts, etc., who at the moment are having to go through actual physical documents or PDFs. And from the regulator's point of view as well, I think it will provide a greater snapshot of where companies really are. But I do take on board some of the comments that Indra had been making about the format, and also we had some comments before about the taxonomy. We've got to get those situations right. So I think it's both a consumer empowerment and also a labour saver, as opposed to AI actually taking on the role.
Okay. Amir, I might turn to you because I know you've been a long-time advocate of digital reporting as well as CAANZ. And I was just wondering whether you could share your insights in terms of what benefits you've seen, in addition to what Julie's just touched on, but also to the level of demand from the profession for mandatory digital reporting.
Thanks, David. It's great to be here. And I'd have to say it's great to see digital reporting getting such a strong run in this forum. It's something that we've been advocating for a long time at Chartered Accountants Australia, New Zealand, and maybe top of the lists for reasons. It goes back to Professor Davern's presentation. If we are storytellers, we need to be speaking in the language that's understood by our users. And so often now, that language needs to be machine readable, as well as, of course, able to generate insights that humans can understand. So that brings us back inevitably to this technology. So I think the reasons and benefits exist in terms of the current very pressing and urgent problems created by falling behind. We're becoming invisible as a capital market to all of those analysts and investors internationally who are increasingly using AI and looking for structured data sets for discovery purposes in research and investment decision making. And we're also seeing retail investors, for instance. I better leave most of that for my colleague here, Rachel, to talk about. But the complexity of financial reporting has got to the extent, no disrespect to standard setters on financial reporting, but I think we all accept that being able to capture businesses in this day and age with the nuance and precision needed is very complex. And to have investors be able to navigate that requires machines to be put to use. That requires a structured data set. So that's the very pressing needs and urgent problems right now. But I think there's also future benefits and paradigm shifts possible through digital reporting. If we're to really think about shifting the boundaries of reporting, digital reporting and being able to have a broader spectrum in our communication abilities than what you can have on a piece of paper or in a 2D format of a PDF document is also essential. And I'm thinking also about Professor Potter's great presentation about those boundaries. I think that was last year at the Hall of Fame dinner. So many of those challenges, whether it's the intangibles and uncertainty, whether it's the way that we present multi-sectoral approaches to things, isn't possible on using paper formats. Now, in terms of the second part of the question, very briefly, to what extent is there demand? Well, chartered accountants, we've surveyed, and I think it's a statistically valid sample. You guys might challenge me on that, but we had quite a few hundred chartered accountants completing our surveys, and we've surveyed them a few times and found that certainly more than half are supportive of the government mandating digital reporting, and a much lower number against. There's a sizable indifferent group who are happy to keep doing things as we are, but I think there's a very strong group of more than half who want to see this happen. And the reasons they cite are, extracting detailed data and interpreting, improving the focus on data intelligence rather than data preparation for the profession. Financial decisions can be made with more certainty. Assisting in automating regulatory filings and streamlining is a very big one. and reducing the errors and the issues that are occurring due to the way we're doing things at the moment.
Thank you, Amir. On that topic of demand, if I can ask Rachel, what are you hearing from the retail investor community around the demand for digital reporting, and what are the benefits that they would like to see flow from digital reporting?
There's definitely demand there as far as we have spoken to our members around digital reporting in our submissions to the Productivity Commission. And also it's worth mentioning, I think Chartered Accountants have done a lot of work on this over many years and some great work, and the Productivity Commission in looking at this, what they're looking for. So retail investors, there's 7.7 million of them in Australia. And then you have those that have superannuation as well. So we have a significant pool of this country that have investments, and they need accurate information. So at the moment, from a retail investor perspective, they're relying a lot on the current PDFs that are available of annual reports, some platforms, and also increasingly AI. There's a lot of interest in AI, but there's challenges with AI as far as the accuracy. So we monitor the ASX 200 for our members, with our members, and we have reports online. But there's a lot of examples where that reporting and an assumption by retail shareholders that they can just use AI and get the answer, it's just not accurate because the information's not accurate. So they want to compare data of performance of companies, and by having digital reporting would really enable them to do that more effectively than they do it now. And I think there's an assumption that retail shareholders don't really do a lot of analysis, but the ones that I meet do an awful lot. They're not accountants, or some are, but a lot of them are behind their desk and they're looking at companies and they're looking at performance. So I think there's a lot of reasons why this needs to be mandated, and maybe starting with the largest companies would probably be the recommendation from retail investors. Let's just get started and let's look at the large companies first. It would help them with accurate information to make better decisions.
Thank you. So I think in terms of the benefits, we can tick the role that digital reporting has in terms of improving accessibility of high quality information. And I think we can also tick the box that there's genuine demand for digital reporting or mandatory digital reporting. So now that we've looked at the benefits, I think the next almost elephant in the room that always comes up when you talk about digital reporting is what are the costs to preparers? And so I'm glad to have John on the panel. And I want to pose this question to John. Can you give us some insights in terms of what are the costs to preparers in terms of preparing digital financial reports? And does that also vary depending on the approach that they take? So in Inrid's session, he talked about the bolt-on approach or the integrated approach.
Yeah, thanks, Dave. I love getting the elephant in the room question. The one no one wants to talk about. But yeah, I'll answer that immediately, really. I think there are two options. Obviously, there's a bolt-on approach, there's a more integrated approach. And I think it depends how you look at technology as an enabler or as a must do. But essentially, the bolt-on approach, you're typically talking high four-figure numbers for digital reporting. If you were to integrate digital reporting into the business as a process transformation, you're talking probably high five-figure numbers or low six-figure numbers in terms of the cost. But what that cost actually looks like in those terms is an annual subscription for software to actually help drive that process. The other way of looking at it is what is the cost of not doing digital reporting? And as Amir just alluded to, the disclosure management reporting landscape is a very dynamic one. And it's hard for any organization to keep pace with what they have to disclose, in what format, aligned to what standards and what frameworks. And you know, the need for information to be standardized, consistent, accurate, complete, and comparable is increasing all the time. And what we're seeing in the market is typically a very manual, inaccurate, and inefficient process that a lot of organizations are still doing. So typically we see office productivity tools, which are great tools, but they were being used for reporting, but they were never really designed for the levels of complexity that people are having to deal with now. And then you think about the convergence of sustainability and ESG reporting, which often comes under the remit of the CFO now. And life tends to get quite complicated for accounting and reporting teams. So I think looking at digital reporting as a technology to enable increased efficiencies, increased or improved time to report, better transparency, more accuracy, less risk to the organization, then you start to see the returns that are available. And typically our organizations that we work with see over 200% ROI when investing in that integrated approach to digital reporting.
Thanks, John. I really like, so what's the cost of not doing that? I think that's a very good question. I think that's a very good way of thinking about and putting the costs in perspective as well. I might now turn to Ingrid to get your insights in terms of the digital reporting landscape globally, because quite often we hear that Australia is behind its competitors or behind other large economies. And I just want to get a sense in terms of, is this a fair statement to make? What are you seeing around the world? I know a few years ago, yourself and Nick Rowbottom, in conjunction with CPA Australia, published a report on digital reporting by G20 countries. So,
yes, thank you, and thanks for acknowledging that report funded by CPA Australia. Yes, I think we are behind. I would rather call that an understatement. We are very behind, sadly. There are 66 projects internationally, the capital market projects in XBRL, right? When we don't have one of those. There are 217 projects that includes all standard business reporting and so on. We have a couple there, but in the capital markets, we have nothing. We have essentially in that report, we list in the G20 a whole range of countries that have done things. China, EU, and that comes as a block, India, Indonesia, Japan, Mexico, and the list goes on and on. Part of the reason why in these jurisdictions things happened as quickly as they did is either because they took the approach of the regulators mandated it, or they started with a voluntary approach, but there was a prospect of mandate coming in a few years later. In the US, for example, they took the best approach, I think, in my view, and there is a similar one in the UK as well, whereby they said, well, in a couple of years, we are mandating this. So they gave people an opportunity, that is when I say people, I mean preparers, to sharpen their teeth, all right, to sort out any issues, okay? And then people learn in that process. So they did not penalize people who got their filings wrong during that voluntary period, but then come the mandate deadline, then everybody was being looked at with a magnifying glass. And again, the regulators in these jurisdictions were looking at people who were genuinely trying to get their filings right, vis-a-vis those who didn't care. So the point is that eventually the reactions from the preparers were, well, we didn't really understand what the hell was this all about because we're all doing it. So they learned about that. So they built that capacity. So if there is no mandate, I don't think based on the evidence on this report, I don't think this is ever going to happen in this country. So if we mandate it, again, we have to give chance to preparers to do something about it, then the odds are that we will move forward. But otherwise, we will continue to remain at the back of the pack, unfortunately.
Yeah, fair comment. Now, Ingrid, you touched on some of the challenges that we see internationally with digital reporting. So I think we need to acknowledge that, it's not perfect and we're not fully at the stage where we are realizing the full benefits of digital reporting from an international perspective. And so with that comment, I might pass the next question to Anne. So Anne, from your experience on the AASB and also as the co-chair of the IFRS Taxonomy Consultative Group, or past co-chair, what have you seen as being the key challenges internationally, and what are some of the learnings that we can take away from those challenges and how those challenges may have been overcome so that we can sort of jump straight to the most effective implementation approach?
Thanks, Dave. So Australia has a great opportunity to learn from what has been happening elsewhere. And the problems have been touched on by speakers already, but it relates to people not using the same taxonomy and the data not being accessible. The investors are looking for data to download it from one source. So that's still happening in Europe, that there isn't a single access point, although that's being worked on. But the most famous taxonomy experiment that we see in the United States, one of the advantages of that is being able to download for free from a central access point. You do have to have some skills to do that, but that's one of the key things. So Australia's in the position to benefit from what has been observed before. And we've touched on the fact that there are errors in coding, and that's still not resolved in a lot of places. And it would suggest that making sure that the taxonomy document is fundamental to the legal required set of documents, that's really important. Audit really has a clear role. The regulator needs to make clear, and this can be over a period of time, this phase-in period, but the regulator really needs to make clear what the expectation is from the preparers so people know what they're required to do, rather this cavalier attitude about errors that Indra referred to. Some of the things that have happened in the past are people not using the IFRS taxonomy or using it in a very limited way in a closed taxonomy, just tagging a subset of the reports where the investors need the whole block. So I think we've got some clear direction that can be followed in Australia. So a single access point, no charge for the data, and picking up on those various other things. Thank you.
Thanks, Anne. Some very good points. So the next area that I wanted to just turn our minds to was AI. And I think in terms of AI, there are several angles that AI has an impact on digital reporting. And the first angle that I might explore with John is, what are the impact of technological developments in AI on the preparation of digital financial reports? Will that completely disrupt what we currently think of digital reporting as it's the preparer's responsibility?
Thanks, Dave. I think, AI is here. Everybody's interested in it. Whenever we're talking to our customers, it's one of the first questions they ask. How does AI help us leverage your platform, for example? AI is not going to replace digital reporting, in my opinion, but it can significantly help support the process. At Workiva, we have a very human approach to AI. And in that respect, everything that we do in terms of incorporating AI into our platform is designed to support the end user in terms of whatever they're trying to use the platform for, whether it's producing financial reports, sustainability reports, managing controls and risk around financial data or sustainability information. And I think the important thing here is leveraging AI in a secure environment so that it doesn't actually compromise the organization, but actually thinking strategically about how can we use AI or how can we embed AI into a technology platform to enable us to do things even better, even more quickly. So, for example, in our platform, we're leveraging AI to manage comparisons and manage controls and risks around information that is reported on, aligning to specific taxonomies, standards, and frameworks, which actually allows for a much quicker analysis of the data and frees up a lot of time for people. And that's completely automated in the platform. And these are just some of the typical use cases of AI in reporting platforms like ours.
Thanks, John. So the other angle that I see AI impacting digital reporting is how information is being consumed by investors. So with that, I might ask Rachel, are you able to shed some light in terms of how retail investors are currently using AI in their investment decision-making process and how advancements in AI might change their expectations about digital reporting?
Yeah, so currently they are using it quite a lot. We've been surprised at how much they're using it. I think it was about 18 months ago, we had our first workshop on how to use AI with investing, and it was really popular. We've run about 4 or 5 since then. So there's this expectation that I can use my go-to AI tool, whatever that is, and we've done a bit of research on this to see what they're using. They're often using ChatGPT, but also other forms of AI tools. And they're wanting to do things around making a good decision with investing. So comparing companies, looking at the fundamentals, the financials of companies. I think what we were talking about before around they're looking always at old data. And I'm not suggesting that's the solution right now, but at some point, I think the expectation for retail shareholders will be about more real-time data to make those decisions. So wherever this digital reporting ends up sitting, so whether that's the ASIC or with the ASX potentially, they would probably want, based on the conversations we've had, to be able to pull that out and extract it in some way into their favourite AI tool. At the moment, even the examples around us doing monitoring and we get a lot of questions. I've put into ChatGPT examples around asking quite detailed questions around capital and how much has been allocated for potential regulator fines and got the wrong answer. So I think what we look a lot is annual reports. We're very passionate about them. And we look and spend a lot of time currently reading the PDF. So there is that assumption that we're moving to a technology world. How can we empower retail investors to be able to do their analysis in it?
Thank you. The next question I have, I'll put to Julie, and that's around, I guess, the overarching question of, do you think that AI will replace the need for digital reporting? I think what we've heard so far is no, but I know that the Productivity Commission looked at this and at least considered this in forming its recommendation. So what was the findings of the Productivity Commission?
No, I think very clearly it's an augmentation for the reasons that Rachel talked about. And certainly the AI that we've got at the moment is not in that kind of, it's still capable of hallucinations or getting things wrong. And I gave that little example before about my own accounting, and the accounting said, yeah, well, it's technically right, but that's not how it would be applied in your case. I do think, which is a slightly different issue, one of the really interesting, so the direct answer is no, I think it's an augmentation with the type of AI we have at the moment. But the other issue, and I'm sure accountants are thinking about this, is the sort of liability issue. And, in accounting, that's, don't want to speak out of turn here, but that's always been very fraught between, well, who signed off on the accounts? What was the information? And I think, as we've said generally about AI, it tends to exacerbate some of the problems that we see. I can't imagine a world where the accountants do not maintain responsibility for the preparation of accounts, etc. But there will be some very live issues, which I'm sure the profession will be working through.
I think that's a very good point in terms of the current approach to digital reporting gives management ownership for that information. And I think that's really key. So there's that element, and also to the structure for which AI will benefit off with digital reporting being in that structured format. Okay, so I think I want to allow enough time for Q&A from the audience. So I might just finish with one more question to the panelists before we go to questions from the audience. And being an academic forum, I think this is quite a fitting question, and that is, and I'll put it to Julie and Anne, how do you think academic research can support policy making in this space and regulation in this space?
Well, I can pay some tribute here to Indrid's work, because it's really, really important for us, because at the Productivity Commission, we have limited resources. We're often given a very tight, doesn't look tight, but it is a tight timetable to do things. So the fact that you've done really in-depth work, and from serious academics, we really pay a lot of attention to that. And we love the fact that we can ring you up, if I may personalise it, we can ring you up and say, what was the basis for you getting to X and Y? And then we might do our own research. So I'm a very strong supporter of any of this sort of research work, and we find it absolutely invaluable. We don't always agree, but it's a starting point for a proper discussion. I've got a lovely little, I'm not wearing today, badge, which Andrew Lee actually gave me, the Minister, which was, we love evidence. Well, our academic colleagues often get us the evidence.
Yes, with that, we love evidence. So there's quite a number of research opportunities here, and I would encourage people, if not yourself, your colleagues, point them towards the recordings of this session. There's great opportunities and really important to get the evidence. So firstly, how the investors are using digital information. Now, that may mean going to data aggregators, because we know that some people say, oh, that the investors don't use it. But of course they're using it. They're getting the data from data aggregators, and the data aggregators are sucking it up. And they love taxonomies for the reason that it structures the data. So have a look at that. If you get it down into the weeds, you know, something about how people tag, the interaction between text block tagging and detail tagging, you know, how the investors are coping with, because it's quite a different approach. And then on top of that, how AI feeds into that. So different tools now. The whole use of AI that we've mentioned in the panel already has got big implications for how investors are working, but also for how standard setters write accounting standards, but also how they do the taxonomy. So there's questions there that evidence would help them. There are some standard setters who would like to see leveraging digital financial reporting to actually allow more information to be inside financial reports. And that is quite a difficult question, because there's always a tension between investors wanting more information, more disclosure, and companies having real barriers to providing that information. And if we think about Professor Davern's presentation today, asking standard setters to be, more braver, I think, more courageous. Research that can speak to those questions of whether how much digital actually changes the way we should approach standard setting is really interesting. A great field for research is with the Europeans, because in the European setting, so many of the questions that we've touched on today about the role of regulators, the role of auditors, data accuracy, data quality, they're all happening, they're all playing out right now. So there is, the data's available. It's not just a matter of waiting for data to come with future standards like the financial statement presentation standard, which will be an interesting one to look at how that's handled digitally. But already there's the European data. So thank you.
Thanks, Anne. Okay, we've got some questions that have come through. I'm going to start with a very, I saw in the earlier presentation there was that comment about attacking as the best form of defence. So I quite like this question in that regard. How promptly could we implement digital reporting in Australia? And I think maybe, Julie, you might be the best panelist to have a go at tackling that question.
Yeah, well, I think that, and I'm going to give a politician's answer probably, it's really a matter for the stakeholders working with Treasury, to be honest. I would see it as a Treasury ASIC space. We'd like to see reporting as soon as practicable, but there's obviously going to need to be a lead time, because it is a big investment for some firms. And I'm sure my colleagues who know much more about accounting than I do will say that some firms, even large firms, are not where you would expect them to be. So that will be one of the issues. But we would expect, if I may say so, my Treasury colleagues would consult very closely with the stakeholders, probably with these sort of things. Usually government will say, we would expect this to be done by this date, and then the regulators will work with the affected parties.
Yeah. Amir, I see you adjusting your mic. Right. So did you want to come in?
We recently did some work with a large number of senior stakeholders, including from the profession, but also company directors, investors, and CFOs, together with Deloitte, and we surveyed them on exactly that question. And I think the outcome was that about a 3-year transition period is realistic for bringing in digital reporting for all those disclosing entities. So that you could imagine is a little bit like what how Indrid described what happened in the United States, a period of knowing that this is coming. So many of the larger players would likely start moving at that point to get ready and be able to go to market with something that they've already stress tested, but then beginning with different tiers potentially of companies, or one of the other approaches internationally, which has its critics but also has advantages, is looking at, for example, the main face of the main financial statements first, and then moving to notes, and there's different ways that you can stage this. So definitely transition is critical to manage the cost. I think a lot of the key stakeholders who are concerned about those costs have in their submissions to the Commission talked about transition being essential. But we think about a 3-year transition is realistic and also would be well supported.
Thank you.
Something.
Sure.
Oh, it just essentially, I see regulation as being the hard trigger, but there is also that soft element that comes into it. For example, one of the Australian preparers that is listed overseas, we did ask them the question, well, you already have a report, you have a voluntary channel, why don't you submit it? And the response was, well, why would I do that? A part of the reason is that it's not being used. And they're also going, even if at a minimum, I am going to compare if I'm going to benchmark against my competitors, I can't do that because I'm this firm, my competitor doesn't have that, and therefore, why would I do it? Why would I do it? Julie mentioned the point of critical mass, right? So you need that, but obviously the regulation will bring that up.
And we certainly had exactly the feedback, Indrid, that you've talked about. People said, why would I do it? The other issue, and I'm sure my colleagues like Amir have a much more sophisticated view, there was a concern about the ability to tell the story, the narrative story in the financial accounts. And there seemed to be this view among some stakeholders, not that they were against the digital reporting, but they were questioning, well, how would we do that?
Yeah, that came up a few years ago, I think, in the press, in response to some of the parliamentary recommendations around digital reporting, that how would we tell our story in the glossy, essentially, that you see now. Well, there's two parts to the answer. I think my response at the time, or my reaction at the time, was, hang on a sec, this is not about telling the story you want to tell. Financial reporting is about telling an objective and real story that people can rely on. So there's that. And if digital reporting helps you to do that in a way that works better, then surely that's the overriding principle. But I think the second part of the answer is, well, it's no longer one or the other. iXBRL, which we would recommend, or inline XBRL, allows you to have a single document that's presented in as glossy a format as you want. And you can go onto the XBRL website. They've got a database of all the European filings that they've created in place of having something like Edgar in the United States. You can jump into the Rio Tinto, who's a dual listed company, or many other company financial reports there, and you'll see the glossies that you're used to. But if you click on any number in there, it's got all of the fact characteristics that XBRL is capturing on each item in the financial and annual report. So we think that's really the way to go. So companies are able to present a document in the form that's always been done, and that a lot of time is spent on. But equally, the data will be there in a structured format, as is so desperately needed.
Thank you. That was really insightful. And also, I think the point that you made about dual listed companies, I think that's something to highlight. There are currently Australian organisations that are dual listed that are preparing digital reports. They might not be filing them with ASIC, but they are filing them if they're listed in the US with the US SEC, or in Europe with ESMA, etc. So I think that's a good case that some Australian companies already have experience in this and with digital reporting. We are quickly running out of time, but I'll ask one more question. And I mean, I might start by posing this question to you. How important is the upskilling of finance, software, and accounting professionals to successfully implement digital reporting?
It's certainly very critical. AI upskilling is also really critical, and we're very focused on that as an organization in our entry level programs as well as continuing learning. I think that when it comes to digital reporting, it's not such a step up really compared to AI or other big shifts. But there is some upskilling needed, and I think that the opportunity that's there for the profession is to adopt the kind of approach that John's been talking about, a more systematized approach, moving on, dare I say it, from Office products or Excel. As much as we love them, they have kept us all up very late at nights in the reporting season, and led to some barbecue stopping errors. Having spreadsheets doing reconciliations and being updated nonstop. I really found that the approach in something like Workiva was a step shift in terms of everything being connected. It's moving us closer to something like real-time reporting, but I think the shift really is in the profession to being really having that as the default rather than something that larger companies are investing in. And yes, there's a step up in training, but we're already well on our way there.
Yeah, fantastic. Okay, I'm over time, but in summary, I feel like I can say it's safe to say the benefits are there, the demands are there. Sounds like the benefits exceed the costs, and AI won't replace digital reporting, but rather actually digital reporting might help the quality of the analysis done using AI. So with that, I'd like to thank the panelists, and I've also been given some notes, so I will share these. Everyone's welcome to join us for lunch, and the next session starts at 1:30, and the next session is on accounting for investments in AI. So if you could promptly make your way back after lunch by 1:30, that would be appreciated. Thank you. Thank you.